We have two stories looking at the next chapter when it comes to debt and the economy. Steve Leisman on the outlook for growth. But we begin with Elon Moy on the record amounts of money being deployed to combat the effects of the virus. Elon.
Well, good morning, Mike. It is so easy to forget the sheer magnitude of fiscal support that we have seen over the past year. But there were 5 bills signed into law, $4 trillion in spending, and a new record for red ink. We've spent $1.7 trillion on loan programs alone, like the PPP and support for airlines. Another $673 billion went toward income support. Think unemployment insurance. $472 billion went directly to testing, vaccines, and other measures to fight the virus itself. And we've sent $458 billion directly to the American people in the form of stimulus checks. Now, together, that has helped drive the national debt to equal the size of the economy. And if we stay on this track, it'll be double GDP in 2051, blowing all previous records out of the water. Now, that doesn't even take into account the $1.9 trillion COVID relief package that is currently working its way through Congress. When you add that to the mix, the pandemic response will total 4.6% of GDP. For comparison, the response to the Great Recession was just 2.4% of GDP. Now, as the debt has piled up, the political will for more spending has dwindled, guys, leading to the kind of party line votes that we're getting now. Back to you.
Elon, thank you very much. Now to Steve Leisman and whether an economic crisis has, in fact, been averted. Steve.
Yeah, Mike, government relief is famous for coming too late in a crisis and often being too small. Not this time. The federal government, as Elon just told us, in 5 separate bills, here's another way to look at it, pumping $4 trillion into the economy last year and now looks likely to issue an additional $2 trillion of aid. Those are the 4 big ones. The fifth one, the early one, at $8 billion is missing. Most economists agree. The result was not only to help turn the economy around, but to avoid far worse outcomes. After crashing 33% in the second quarter of 2020, growth came back by an unexpectedly strong 31% in the third quarter. There were business reopenings, but a huge impact came from government flooding the economy with cash. Economists had initially forecast half the third quarter growth we got and ended up being wrong in part because they were surprised by the speed and the size of the fiscal response. The Fed in June, they'd forecast a 6.5% decline for 2020, and then it ended up being down 3.5%. The current impact of that large spending. The economy is in better shape for the turnaround. We have a high savings rate, and that's going to help spur future consumer spending. But there are questions about inflation, the deficit, and whether indeed more is needed in that $2 trillion package. What's clear is that the rulebook has been rewritten for government responses to future crises, to go big and to go early. The U.S. economy forecast to grow more than 6% this year. That's a result of the prior bills and the current relief package. What's not been embraced is the rule that one should reduce deficits in better times to prepare for worse times. And what we will find out through the bond market and the inflation numbers is whether there is a limit on just how big you can go.
Shepard Smith here. Thanks for watching CNBC on YouTube.